I'm Pratap here. Today is the 21st February 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Today also we have completed 200 high liquidity zone trades, and we will also discuss these statistics in detail. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. You can access training lessons from the playlist Supply Demand Zone Price Action course. Click on this playlist and you will be able to access all these training lessons. I have also provided a link to the playlist in this YouTube video description. If you click the link, you will get into this page. Then scroll down to the bottom of this page, and here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description, and please go and join in the Telegram channel so that it will be helpful to you, because each time when we release a video, we will provide an update in our channel. Now let us get into high liquidity zone analysis. First, let us start with the 200 high liquidity trades, because we've been monitoring all the high liquidity zone trades on the next trading day, because today we are generating the report, and whatever the stocks we are identifying near high liquidity demand zones and supply zones, we are looking for the trades in the next day. And whatever the trade that is executed in the next day, and also we are evaluating those trades and how much percentage of the profit we got, and what is the ROI, that is return on the investment as per one future slot, that everything we've been discussing. And then again we are generating the next day's high liquidity zones. This is what we've been doing for the last 4 months. Starting from October, we've been monitoring all the statistics, and today we have completed 200 high liquidity trades, executed high liquidity trades. And out of these 200 executed high liquidity trades, 177 trades are successful and 23 trades are stopped out. And the success rate is 88.5%. At the time when I developed the algorithm for high liquidity zones, my objective is these high liquidity zones should have a minimum of 80% success rate. So we are within that objective what I have set while developing this algorithm. So after completing after completion of 200 high liquidity zone trades, we have a success rate of about 88.5%. That is excellent. We can say it is close to 90%, but not exactly, but close. So exact figure is 88.5%. And for all these 200 high liquidity zones, the average intraday ROI, within the intraday, how much profit we got, that is what we've been tracking on each day during our analysis discussion. And during the intraday, each trade is giving an average of 6.1% ROI. 6.07 is close to 6.1%. This is the average ROI we are getting for all the 200 trades, because we have seen some trades we got a ROI of around 8%, 9% also. Few trades I got ROI of only 3 to 4% in between. And majority of the trades average ROI is between 5% and 6.5%. So that is the way we got an average ROI of 6.1%, close to 6.1%. And all these trades every day we are discussing in our daily analysis videos, HLQ and HLQ zone analysis videos. Apart from that, I'm also maintaining all those whatever the profits they have given, whatever the trade is executed. For quick reference purpose, I'm also maintaining them in the Excel sheet. This is the Excel sheet. Every month I am posting at our Telegram channel. Even today also I will post this Excel sheet at our Telegram channel because 200 trades are there for our reference purpose. Because this Excel sheet is having columns, so in which stock we got the HLQ trade. And our software has reported on which date it is reported, because every time when our software generates the report, we are updating those details in the YouTube. Because you've been referring all our reports through YouTube videos. On which date we generated, YouTube video we generated. On which date we got the trade. Those details we are mentioning. This is generated on 29 September, but we monitor the trade on 3rd October. Initially what we did, we generated only high liquidity zones. Initially we didn't generate 75 minutes high liquidity zones. Only daily high liquidity zones. Daily high liquidity zones, few zones we considered even after 1 or 2 days. But we made that rule very strict, especially for the last 3 months. Whichever the day our software is generating the report, only on the next day only, because today we are generating report through our software. Those trades you have to take only next day, that's it. After that they are no more valid. That is the way we put a strict rule to get more success. Because we are having 75-minute zones also. Because 75-minute zone, there are higher possibilities we get a trade on the next day. So that is the reason why we put a very strict rule after that. So that's why initially you will be seeing few trades before 1 or 2 days before that. So this is the report generation date and this is the trade date. And what kind of trade it is? Is it a short trade? Is it a long trade? And how much profit we got? Intraday profit. Please remember, we are always looking for the profits during the intraday because we are getting 6.1% average ROI as per one futures margin cost. Futures margin cost is our investment. Further, on that investment, we are getting an average of 6.1%. That is a huge profit. So that's why mostly we are closing our trades during the intraday itself. That is what I am recommending everyone. Close your trade during the intraday itself. Next day you may get a profit. That is a different question. But next day you will also get a trade in some other stock. If we add on today's trade 6.1%, next day's trade 6.1%, you will be getting 12% profit. If you carry the position, today you may get 6.1%, maybe tomorrow you may get only 2% profit. Sometimes it will turn back and hit the stop loss. That possibility is also there. So that is the reason why we've been monitoring, we've been closing our trades during intraday itself. Even though they are DIT trades. So this is what intraday profit or loss as per one futures lot. And next one is ROI, return on the investment as per one futures lot. And in the comment section I added in which zone, is it daily zone or is it 75-minute zone. Sometimes we got second entry, is it second entry. Sometimes we may get bull trap or bear trap related. Those details also, see here ABB bull trap. Or is it aggressive trade? Sometimes we are trading aggressive trades, but bypassing one time frame and directly going to the next time frame. And based on price action clues, sometimes we take trades, aggressive trades. See here, in the comment section I specified aggressive trade as per here the price action clue is entry buffer. Or sometimes it could be a rejection, aggressive trade as per the rejections. These are all price action clues. All these things we discuss in the daily, everyday analysis video. But quick reference, whatever we discussed, all that information I'm maintaining in this Excel sheet. So that at any time, if you want to refer any video, or if you want to refer any stock, say all of a sudden you want to refer HR Motor. What kind of trades we got? So here, what you do, you go to 10th January 2024, our YouTube video, you will open. There, what is the demand zone, what is the supply zone of HR Motor, in which time frame, this is a 75-minute zone, in the comment section I am specifying. And it is a short trade, supply zone. Those details you can find on the 10th report. And the 11th report, we got the trade. If you again go to the YouTube, our YouTube channel, go to 11th January, and if you refer 11th January YouTube video, there we discussed about HR Motor trade. What happened during that day? At what level the price we got the trade? What is our 15 minutes target? Has it reached or is it failed? All those details we are discussing every day. So these dates are reference to our YouTube video. Because we have so many everyday analysis videos are available at our YouTube. Any point you can discuss. Because we are making everything transparent to the public, so that people know how our high liquidity zone concept is working. We are maintaining the transparency. This is one thing, and another important thing I want to show you here. So total 200 trades, let us assume, it is not practically possible, but let us assume you have traded all the 200 stocks. Practically that is impossible. Why it is not impossible practically? Because same day, same time, 2 stocks you might have got the entry. Probably you would have taken trade in one of those stocks. Maybe if you have sufficient capital, you may take a trade in one stock, again another trade also in another stock you would have purchased. But there are higher chances that you might miss the trades also, because when you want to take a trade, currently when you are placing order in a trade, by the time the second trade also executed at the same time, exactly at the same time. Before shifting to the second trade, the price might have entered into the zone and then came down, because the pending orders in that particular zone might have pushed the price. So that way you miss the trade. But let us assume you have taken all the 200 trades. And what is the cost of each trade? And mostly the average cost will be between 1,80,000 to 2 lakh rupees maximum. That is the average. Because we have seen majority of the stocks, they have one futures margin cost is around 1,60,000, 70,000, 80,000. That is what we have seen. But upper limit I am keeping 2 lakhs rupees. This is the average cost. Because we have seen some stocks even 1 lakh rupees or 90,000 also we have seen some stocks margin cost. And also we have seen some stocks margin cost is around 3 lakhs. So that's why I fixed 2 lakhs is the average cost. Let us assume. But even it could be less than that only. Upper side we will keep. 2 lakhs is the average margin cost for all these 200 stocks. And if you would have taken your trades in all these 200 stocks, some stocks you got losses, some stocks you got profits. As I told you earlier, you got profits in 177 stocks and you got stopped out losses in 23 stocks. Of course, your loss is minimal only, but let us take the average of all. Even losses also we consider. Profits and losses together, finally how much profit you got. So let me sum all these columns. Anyway, the Excel sheet does the calculation automatically. So 201, but I am calculating 200 only. Only 200 stocks I am calculating. and the total sum is 19 lakhs 7,980 rupees. That means close to 19 lakhs 8,000, or you can say 19 lakhs simply. See, your investment is only 2 lakhs for each future. If last 4 months, if you would have taken trades in all these 200 stocks, all the 200 trades, you would have got 19 lakhs profit. But your investment is only 2 lakhs. But it need not be 2 lakhs always, because sometimes we have seen in a single trading day we got 3 trades. I think maximum was, I think it is 3 trades we got executed. Maybe some out of these 3, some are after completion of the first trade, second trade is executed. In sometimes same time, all the 3 trades are executed. That also happened. If all the 3 trades are happened at the same time, probably your investment would have been 6 lakhs. Because first trade you have to spend 2 lakhs, second trade again another 2 lakhs, third trade again another 2 lakhs. So on that day your investment would have been 6 lakhs instead of 2 lakhs. Suppose trade 1 is completed, after the trade 2 executed. Whatever the 2 lakhs you invested in the trade 1, you closed it, your money is released. Same money again 2 lakhs you are investing in the second trade. Because every day won't happen exactly the same way. And every day 3 trades are not executed, because many times we have only 1 trade or 2 trades. 1 or 2 happened many times. And rarely 3 trades also executed on the same day. So imagine, you would have got 19 lakhs profit. Let us assume you are taking only 1 trade per day. If that is the case, if you take 19 lakhs divided by 2, at least half the profit you would have got. You would have got 9,50,000 rupees profit. Why I am taking only half the profit? Because sometimes at the same time 2 or 3 trades are executed. You would not have taken trade. You are taking only 1 trade only. If the trade is completed, your money is released, then only you are investing in the second trade. If any second trade is executed after the completion of the first trade. That way I am taking only the ideal scenario is half of the profit, not the full profit. That means your investment is only 2 lakhs per trade. And you are at a time, you are taking only 1 trade until the trade closes. That means you exited from the trade. You are not taking the second trade on the same day. After closing the first trade only, you are taking the second trade. In such kind of situation, at least an average of 9,50,000 you would have got. Worst case, you don't want even half, you want to give 1/3. So out of 19 lakhs divided by 3, still you would have got 6,33,000, say close to 6.5 lakhs, or maybe round figure 6 lakhs. Your investment was only 2 lakhs. At any cost, it is 2 lakhs, but your profit is 6 lakhs. But actually, this is also not ideal scenario. You should get better money than 6 lakhs. The reason is, generally, what happened when you are investing. Your money is doubled within the same month or the next month. Now your capital is increased from 2 lakhs to 4 lakhs. Then instead of taking a single lot, you will be taking 2 lots. Because you will be investing same money again. What is your goal? You don't want to keep your money ideal. You want to invest. And you want to make it double as much earlier as possible. That means maybe first 2 months you would have taken only a single trade. After 2 months, let us assume your amount is doubled. Because we are starting from October, November, let us assume by end of the November, let us assume your money is doubled. Then December onwards, you might be taking 2 futures lot instead of single lot. That way you get maybe at least 8,000, 9,000 or close to 10,000 profit you would have got. Not 8,000, I'm sorry, 8 lakhs. You would have got either 8 lakhs or 9 lakhs or maybe close to 10 lakhs profit you would have got. See, this is a number game. You need to understand these numbers properly. But the calculation is at a time you will be taking only a single trade. In that single trade, maybe if your money is, if you have enough money, if you have 4 lakhs, probably you will be buying 2 lots of one future. But whatever it is, definitely if you are seriously trading, starting from October by using our NeoStock's everyday's report, definitely by this time your money would have been doubled, your investment would have been doubled. That is the worst case scenario. I'm not talking about the best case. Worst case scenario. Your 2 lakhs would have been 4 lakhs or 5 lakhs. Best case scenario or average case or ideal scenario, I'm saying ideal scenario, definitely it would have been close to 10 lakhs rupees. If you would have been seriously following high liquidity zones from the month October until the date. If you would have invested in futures, I'm telling these statistics. Maybe you might have taken intraday trades on cash. Maybe you might have taken options. And based on that risk reward in those concepts, probably your profit would have been different. But here, whatever the statistics I'm saying, from the futures point of view. See, the most important point we have to observe, the success rate. We've been seeing this success rate every month. We have completed 100 trades. At the time also we have seen success rate. At the time, I still remember, at the time we completed the 100 trades, the success rate was around 94%. But what we are expecting, 80% success rate. You may ask a question, why from 94% it has come down to 88.5%? Even though the difference is small only, but still you may ask a question. The reason is, during 100 trades, we haven't introduced, maybe after completing 70 trades or 60 trades only, we introduced 75 minutes high liquidity zone. 75 minutes high liquidity zones, probably they have a little higher failure rate compared to daily high liquidity zones. A little higher, I'm saying. That is the reason why you have seen some differences between 94% to 88.5% on average. But anyway, that is a considerable margin, because our expected is only 80%. Compared to 80% success rate, achieving 88.5% is it's really great, excellent. But the only point you need to consider is seriously is fine tuning the zone. You have to build that skill. How to fine tune the zone accurately, that skill if you develop, then only you get the success properly. If you are not good enough in fine tuning the zone, that is what we discussed in our lesson 16 in our training program, lesson 16.1 and lesson 16.2. That is only the key factor for our success in high liquidity zones. High liquidity zones trading analysis is very easy. The reason is we don't bother about the trend, we don't bother about the price direction, we don't bother about the location, that is curve. We are not even worrying much about the other factors, the strength of the zone or other factors also we have given least priority. Only thing importance we have given is a minimum 6 base candles. It should not be base candle, should not be more than 6. That we are strictly following. Anything is there, we are leaving because we know they will be failed. And then we are strictly following, fine-tuning the zone. Inside daily, we are identifying 75-minute zone. Inside 75 minutes, we are identifying a 15-minute zones. Inside 15-minute zones, we are identifying 5-minute zones. That way, we are fine-tuning the zone, and we are using some price action clues also, like any rejections are there near the zone. We are considering even second trade also in that zone, in the 5-minute zone. Just touched the proximal line, and then price moved away from that zone. Then we are giving importance to that zone even for the second trade. Even though they are just tested, we consider that is the area strong order flow is there. When we are leaving the zone, if price entered inside the zone, then we are not looking for the second trade in that zone. Just before the zone or just touched the proximal line and the prices are moving away from the zone, then we are considering even second trades. That way, because they are all the clues, price action clues. Because we are observing these price action clues properly, that's why we got a very good success in all these high liquidity trades. Only this is the only skill you have to develop. But rest everything is done by our software. And one more important point we learned, what is that? When a zone can be failed, we are identifying whether this zone will work or it will fail. If you identify the zone will be failed, because we discussed the reasons. In many high liquidity zone sessions I explained, even lesson 16 also in the training lessons also I explained when a zone will be failed. Almost every, if not every, at least every once or one or two daily high liquidity zone analysis, we've been seeing some zones will be failed. At the time we are discussing what are the reasons behind failure of this zone. Those who are attending our high liquidity zone videos every day, by this time they would have gained a very good knowledge. Sometimes in between you will be seeing some new points also that haven't happened earlier. That's why it is important for everybody every day at least to attend this session, high liquidity zone analysis session. Why I am spending more time today on these statistics? Because these are the numbers should motivate you. Once you get a motivation, see, this is our money giving concept, high liquidity zones. I haven't seen no other concept gives such a good money and fast money. You get the money very fast. You earn, you get the profits. Your earnings are very fast. Whatever the profit you are supposed to get in next 2 days or 3 days, same profit you are getting during intraday itself. That means our money is released. Today itself you got next 3 days profit. Once you close the trade, your money is released. Now you are again the same money you are using for the next day again. And if you are holding the positions, what will happen? Your money is tracked until you close the trade. When you get 6.1% average ROI during intraday itself, why should we hold the stock? We get the profit again in the next another stock tomorrow, because every day on average 1 or 2 trades are getting executed. Rarely we see our trades won't be executed. Previously when we traded only on daily high liquidity zones and supply zones, at the time we have seen some gaps. Few days we didn't get the trades. But the moment 75 minutes high liquidity zones also we introduced in our trading strategy, high liquidity zone strategy, from that time onwards we are getting many trades in the 75-minute zones. Here the key is our software is finding the stocks near the zone. That is the key point for getting the success. And the second key point is the fine-tuning the zone strategy that we learned. Two ways it is helping. Checking the good price structures and good zones where the real order flow is there. And the second point is knowing the zone will be violated. In that zones, we won't take any trades. And the third point is also there, observing the price actions based on the rejections. If more rejections are there from any zone, and those zones works multiple times, those zones a lot of order flow is there, that is the indication. That way we don't miss trade in that zone if prices are entering into that zone. So this is what some important points we need to revise. Actually, I'm just revising what we've been doing all these days because it is an important day. We have 200 trades completed today. It's a double century. So obviously the important points we have to revise. That's why I spend a little extra time on this point. Anyway, I will be posting the Excel sheet in our Telegram channel. So again, you can use that Excel sheet and you can reference and you can go through all those stocks and all. Just recall what you have done for the last 3 months or 4 months, starting from October onwards. Now let us get into analysis of high liquidity zones generated in our yesterday's report. Yesterday we identified only 3 stocks. The first one and see here, look into the NIFTY. This is called a reversal bar. We have higher high, lower low, and today's close is closed below the yesterday's close, and moreover near the yesterday's low. So you should be very careful when you have such kind of pattern. And next day, if tomorrow lower low is there, it is not advisable to go for long orders until the high of this, until a new all-time high forms. Because there are higher chances that market may turn into bearish. I'm not saying it will turn into bearish. Tomorrow if lower low is there, lower low, there are higher chances market will turn into bearish. Sometimes we will also get some false signals also. Let me show you. Look into this candle. Here, this is the market all-time high. Market all-time high. See the bearish candle. We have higher high, we have lower low. Close is below the yesterday's low. And in next day's candle, we got lower low. But still market again turned. And once market reaches higher high, this signal will be closed and it will turn as a false signal. But if it is a true signal, see how market will be. Let me show you here. This is 21st October 2021. Sorry, 19th October 2021. This is 19th October. Market is at all-time high. The signal should be considered. This is called reversal bar. The reversal bar happens only at market is at all-time high. See, the next candle is given all-time high. And it has given higher high. And then it has given lower low. And see the close of today's candle. The present candle, what I mean to say, present candle. The close is lower than the previous candle. See the next candle, lower low, has given the confirmation. Confirmation that market will be, it is a reversal bar. Now market is going to be reversed. Till that time, see, market was bullish. Now after this lower low, see what happened to the market? It is a fall, and after that further, there were some recoveries there, but still again, the downtrend is continued. Still some more recovery, once again the downtrend continued. And finally, when it crossed this new all-time high here in this candle, somewhere here. This is somewhere in 29th November or 30th November. market reached into. This is in the year 2022. But this one reversal bar is we happened in the year 2021, October 21. This is in October 22. That means it took 1 year time to recover, to reach the new high. See the sharp fall in the market. I don't know how many of you are in the trade in the month October. I looked into this signal. I'm not saying it happens every time, but many times that will lead to a powerful signal. If tomorrow, if there is a lower low, and if the trend continued, mostly we may expect at least one demand zone has to be violated after that. One demand zone has to be violated, please remember. If the demand zone is not violated, then the effect won't be there. Previously also you have seen. There is a reversal bar here, confirmation is also happened, but after that market revert, it turned into a false signal. But is it going to be turned into a false signal, or again market will get into bearish market? That we will see, we will understand only after few days. One demand zone has to be violated. That is the point you have to observe clearly. The supply zone should be created, and after that a demand zone has to be violated. But now let us get into the analysis of high liquidity zones. The first one is Kotak Bank, Kotak Mahindra Bank. So this is a daily high liquidity zone, drop based drop. I didn't fine tune the zone because the structure is not good. Look into the 75 minutes. See, we have a rally candle. This is a rally candle. This is a drop candle. In between there are no base candles. That means 75 minute zone structure is not good. Such kind of zones will be violated easily. But anyway, today prices did enter into this zone. But we don't look into such kind of trades. We will leave. Sometimes institutions may create a new 75 minutes supply zone inside this and push the prices down. In the retracement, we can expect a trade, but at this point of time, we can't take a trade in this zone. If institutions does not create a new 75 minute zone, mostly this zone will be violated. And the next stock is NIFTY. NIFTY is a 75 minute supply zone. We have a leg-in, ERC candle, 4 base candles and a drop candle with leg out. And inside this, we identified 15 minute zones, 2 15 minute zones. This is the first 15 minute zone. And this is the second 15 minute zone, rally, base, drop. If you get into 5 minutes time frame, in the bottom one, we have identified a rally, 3 base candles and again a drop candle. With hidden body. If you add a hidden body, it is a drop candle. So that way we can plan a trade in this 5 minutes fine-tuned area. But look into the second one. The price structure inside is not at all good. Here we have a leg candle and another leg candle. This is the leg out and leg in. See the base candles 1, 2, 3, 4, 5, 6, 7, 8. So that's why we are not having any comfort about this zone. But you may ask, previously prices there were some rejections here. That means there could be a strong order flow. Maybe at 1 minute level it will be there. But anyway, we are not using them for time being. Such kind of zones, we always treat them as a risky zones. Always we want safe trades. At least some guarantee should be there. This 5 minutes, some guarantee will be there. And PNB. It was near supply zone yesterday. This is a 75 minute zone. But we got trade in demand zone. How? Because both these zones are high liquidity zones. That is what I told you earlier also. When both demand and supply zones are high liquidity zones, in one of these zones you will get a trade many times. But this is a zone, supply zone is a very old zone. When it created in the year February 18, that means we cannot fine tune this zone with 15 minutes and 5 minutes. But recently prices entered into this zone once. So at the time new 15-minute zone is created. Here prices entered, here new 15-minute zone is created. Let me show you that in the 15 minutes time frame. See, here we have a rally candle, base candle and a drop candle. That way we got a 15-minute zone. And inside this 15-minute zone, a 5-minute zone is also we have fine-tuned. We have a rally, base, drop. See, recently there is a huge rejection. Prices went and rejection. Went there, again a rejection. That means a lot of order flow is there in this zone. There is nothing wrong taking another trade also in this zone, even though it is tested. Why there is nothing wrong? Let me tell you the reason. If you consider this as a rally candle, 1, 2, 3 base candles, then again a drop candle, the ERC candle. So that means from this zone, a new zone is created. The order flow here in this area should be completed and then only prices enter here. From one zone, new zones are creating means huge liquidity will be there in that zone. That is an indication. That is a clue. In such kind of zones, you may take multiple trades. Maybe that kind of zones will be converted to the high liquidity zones. Because institutions keep on creating multiple zones in this area, new zones. That's why we can expect a huge order flow in this area. Later on, they will turn into high liquidity zones. This is about supply zone. This is what our software reported yesterday, near the supply zone. But near to this, there is a demand zone is also there, a 75 minutes demand zone, the high liquidity demand zone. We have a rally, 2 base candles, 3 base candles and a rally candle with hidden body. So we also fine-tuned this demand zone at 15 minutes time frame. See here, we have a drop candle, 1, 2, 3 base candles and rally candle. This is 115 minutes demand zone. Next, another legging candle, 1, 2, 3, 4 base candles, again a rally candle. There is one more 15 minutes demand zone. And these demand zones are fine-tuned at 5 minutes level. From the first demand zone, we have a drop base rally. This is the first 15 minutes demand zone. We have 5 minutes drop base rally is there. And there is another drop base rally is also there, but this is already violated previously once prices entered into this. Previously, once prices entered into this area, the first 15 minutes area. The second 15 minutes area, we have a rally, 4 base candles and a rally candle, follow through candles, and prices went up and entered into the zone. See here, at proximal line it touched and then how it moved up. After that, again there is a huge move from here. See, after taking the position from here, there was a big move. And moreover, prices did not enter into the zone, just entered into the proximal. That indicates there is a strong order flow in this zone. And there is one more rally, 2 base candles and a rally. So it is completely a fresh zone. This just proximal line it touched. That means the real order flow is not taken from this zone. We can expect, because of this price action, a strong order flow is there. If prices entered into the zone, we can take another trade. There is nothing wrong. If it fails, suppose the risk is very minimal only. But if the order flow is very strong, there is a huge chances of getting a success. And above that, there is one more zone, drop base rally. This is a fresh zone. We can take an entry. Let us assume if this zone is failed and came, already this zone might have consumed the supply. And in this zone, so much of demand is there. Definitely, this zone will get success. Suppose if this zone fails. If this zone doesn't fail, we get an entry. If this zone fails, you will exit. Again, you take an entry in the second zone. Even if second is also failed, the third one you take entry. You will exit from the first stopped out, you will exit from the second stopped out, and you take a trade from the third one. Definitely one of these zones will be working very well because a lot of order is there in this area. So much of order, demand is there. Definitely in one of these zones, the supply would have been consumed. And today, during the last 1 hour, prices entered into this zone. But do we take during the last 1 hour of the trading? Generally, we don't take trades. But previously, once I told you, even we can trade during the last 1 hour of the trade. But you cannot expect 15 minutes target. Your target should be only 5 minutes zone. Your target zone should be 5 minutes because market entered into the last 1 hour of the trading. Mostly we don't trade. But those who wants to take a trade, who wants to take chances during last, because this is a high liquidity zone. See, today what happened during the last 1 hour? Till the last 1 hour, prices did not enter into this zone. But last 1 hour, we got trades, 2 trades in this zone. And one trade is stopped out, that is our 200 trade is stopped out. And in 201 trade, the another zone, it gave a profit, good profit. See today what happened. It created a 5 minutes supply zone and see how the first zone is stopped out. Prices pierced this zone. Just pierced. Actually, you would not have exited your trade here because just narrowly, maybe just 5 paisa below the zone it came. Only 5 paisa from the stop loss. So you are still in trade. After that, prices moved up, but unable to reach the 5 minutes target. It only reached half of the target. From here, it only reached half of the target up to here, but still you will be waiting prices to reach this 5 minutes target, the supply zone, but prices didn't go up. Again turned. Once again it took second trade from this zone. Again there is a rejection. Maybe in this gap there are some orders are there. That means it is consuming all the supply. Supply is very strong, consuming all the supply. But our prices didn't go. And finally prices came down and hit the stop loss, maybe at our stop loss buffer. You exited our trade here, and after that it entered into the second demand zone below this. And this is the zone we already predicted there is a strong order flow is there because there was a huge move from this year. Just prices entered into the zone, touched the proximal line, type 1 proximal line, that is zone high, not even entered into the zone. Then immediately turned back and moved up. That's why we predicted a strong order flow is there. So prices went a little deep inside and the strong order flow consumed entire supply, Now supply is completely weakened because these pending orders consumed the entire supply. Now see the push after that. Went up and finally reached the target. So which candle we got the entry? At 2 o'clock 35 minutes candle we got the entry. And at 3 o'clock 10 minutes candle it reached the target. That means within 35 minutes the trade is completed. And that way, the first zone, the first 200 trade, we got loss, 1600 rupees loss we got. And which is 0.5% negative ROI. Because we got a loss, the ROI is negative ROI, minus 0.5%. But we accept our, risk up to 2% in general. And in the second demand zone, when prices entered here, we got a profit of 10,800 rupees. From this 5 minutes demand zone to 5 minutes supply zone, we got 10,800 rupees profit, which is 3.4% ROI. You may ask, for 10,800, we got only 3.4. Yes, the reason is the margin cost is around 3 lakhs 15,000 rupees. In general, our average margin cost is 2 lakhs, even below that. So this is at 3 lakhs. That's why even the profit is 10,800, but the return on the investment is only 3.4%. If you deduct the loss, the 0.05, still you would have got 2.9% profit. 2.9% ROI you would have got. That's why once a zone is violated, we should not get fear. If a zone is violated, the next zone you have higher chances of getting the trade. Previously also we have seen. Previously once, I didn't remember exact name of the stock, 2 zones are violated, third zone we got the trade. And that too, the third zone is not fully fine-tuned. That is an aggressive trade. We skipped one of the, because based on the price action clue. The 5 minutes is not inside the 15 minute zone. The 5 minutes is inside 75, but not inside 15. But still we took a trade because that is an aggressive trade. That day we got a very good profit. Around more than 10% ROI we got on that day, if I am not wrong. But today we can't expect more ROI because this is last 1 hour trade. Last 1 hour, getting 2% ROI is an excellent. But we got 3.4% ROI we got. And that too on the second trade. The first zone is violated and the second zone is successful. So this is about Punjab National Bank, and this is the last high liquidity zone from our list. I hope this information is useful to you. And also you should understand our high liquidity zones are always giving success. The failure rate is very, very less. Very less. See, for example, in today PNB, if you look into this, one zone we failed, but another zone we got the opportunity, and whatever we lost, everything we regained back. And apart from that, we got good profit. So that's why opportunities always, high liquidity zones always provides the opportunities. So please concentrate, build the skill, how to fine tune the zone, observing the price actions. And even if it is stopped out one of the zones, you should not break your heart. Because next day you get whatever the loss you got today, probably the entire profit, again more profit you will get in the next trade. Even if a zone is stopped out, that is at a minimal level only in our high liquidity zones. But only skill you have to develop, fine tuning the zone in an accurate way. If you don't fine tune the zone properly and if you get losses, then you should not blame the system or you should not blame anyone. Even you should not blame yourself. That is an indication that you have to get better experience or gain better knowledge in fine tuning the zone. Why every day in high liquidity zone analysis video I am telling you, I am showing you the fine tuning, how I fine tuned the zone. Because I am feeling this is your learning, because whatever I am explaining will be helpful to you to gain your experience. Probably next 2-3 years, whatever the experience you are going to gain, The next 2-3 years experience probably you may get in next 6 months every day if you watch these high liquidity zone analysis videos. That is my intention behind every day explaining these concepts. Otherwise, see, the simple thing, I can finish this video in 5 minutes. I can show you these 3 zones. Okay, out of these 3, we got 2 stocks profit or 1 stock profit, or 1 stock profit and 1 stock we got stopped out. I can tell how much profit we got, how much ROI we got, and I can close the video. And I'm not doing that. I'm showing you how I fine tune the zone, how we identified the trades. That is the skill you have to develop. That's why next 6 months, seriously, you need to watch these videos. Without watching the videos, you will not gain experience from me. You can gain the knowledge, but you have to struggle for next 2-3 years without my help. That way also you can get the knowledge. But it will take 2 to 3 years time for you. The same knowledge you can get in 6 months every day by going through all these videos. Every minute point you have to observe in the video. If it is a 30 minutes video or 40 minutes video, at least watch it for 1 hour or 1.5 hours. Because some points you need to repeat second time or third time. I'm not saying entire video. Some points, especially while fine tuning the video, you have to observe how I am thinking, similar kind of mind thinking you have to develop. That is only experience. We call it as experience, nothing more than that. Once you get the experience, automatically you get the confidence, and you will be able to do your own analysis, and you will be able to find the zones, the fine-tuned zones, fine-tuned zones in an accurate way. So this is about today's session. Hope this information is useful to you. Let us all meet again in our next video. Thank you.